Welcome to Geodit Spotlight. 2024 has been a very eventful year. Elections, budget, war, volatile markets, lot of questions for investors to answer. And for that, we have a few analysts here from Geodit. So we have Anto, who follows infrastructure and paint, Arun Kailasan, who follows power and capital goods, and Anil, who follows defense, aviation, and capital goods. Anto, in infrastructure and paint, how was the year of 2024 for these sectors, and what do you think will be your outlook for 2025 for these sectors?
If you see the overall performance of the market for the last 2024, you can see that the Nifty has given a return of 11%, while the infrastructure index has given a performance of 18% of return. It is outperformed the benchmark indices. And if you delve more into this script, that is especially the performance of first half of the current financial year, the companies from infrastructure space has seen some kind of slowdown in the execution. What happened because of the slow pace in capex spend by the government, which when we see the capex spend compared to the last same period for the last year, there is a 15% of drop. Out of the 11.1 lakh crores of capex that is allocated from the union budget, we have seen only a 4.6 lakh crores of spending has happened till October month. So there is a 15% of drop, which is reflected in the company's execution and all. So the H1 of the current financial year, there is a slowdown in the execution has happened. The other factor is the general election and followed by 8 state elections, which has impacted the performance of these companies and all. For the outlook purpose, I would like to say the capex spent since the elections is already over, the same government has formed for the next 5 years as well. So the spend is likely to improve in the coming quarters and all, which will be reflected in the company's order book and execution is going forward. So the outlook for the infra specs for the coming year, we are remaining positive on that. If you see the order book to sales ratio and all, the companies have pretty much of order they have, almost 2 times of their trailing 12-month revenue, they have the orders. For the next 2 years, the company has in the same position and all.
Also, very, very bullish about infrastructure.
Yeah, especially we are bullish. On the other hand, the paint sector, with the paint, we have seen some kind of underperformance compared to the market. The major players like Asian Paint, can say Nerolac, Berger Paints and all, have seen some kind of consolidation in their performance. That is especially happened in the first half of the current financial year. Why? Because the new entrant has come into the paint space, that is Birla Opus, with their capex of 10,000 crore, and they want to become a second largest paint player in India. And the other thing what we have seen, the sticky inflation and deferment of spending by the consumers and all, that has impacted the volume generation and the realization of these companies and all. So that is impacted the stock performance. The volumes for these major large players has impacted in the first half of the current financial year and all. So the question is whether this trend will continue or not. That is a big question. That is investors want to look forward that. For the investors, our recommendation is the large player like Asian Paints and all, the near-term consolidation is likely to continue because the new player is coming there, putting a much discount, at least 10% of discount they are providing to the consumers and all. But on the long run, I think the Asian Paints will continue to perform well.
Oh, very nice. So always infrastructure and paint go hand in hand.
Yeah, it is the all depend on the capex spend. It is economic metric we can easily compare with the GDP growth and all. These companies are always perform much above the GDP growth and all if you see the last decade of performance and all. And the projections for the next financial year, the growth likely to be a 6.3, 6.5% and all. It is pretty much good for the Indian economy and all. If you see the Q2 GDP growth has come down to 5.4%. It is below estimate and all. The same point is applicable to GDP as well. Like the slowdown in capex spend, inflation, reduction in urban demand that has happened in the economy. That is why the GDP also coming down.
Arun, you handle power and capital goods, right? So I would like to know what is your outlook for 2025 and how the year went for you in these two sectors.
Yeah, so if you look at it, power and capital goods was the talk of the market for the last 1 year. But in the last 6 months, we have seen these two sectors undergo some correction. And for the reasons that were stated by Antu, the earnings estimates that the market had predicted was considerably high. And in this particular quarter, driven by a weak seasonal demand when it comes to power sector and due to the slowdown in the capex by the government, the capital goods sector was also impacted because of that. So that is the reason why if you look at the capital goods index, BSE capital goods index and the BSE power index, they both have underperformed the broad market by 10% and 5% respectively. Now, if you look at it in the next 12 months, the expectations are that for the earnings of capital goods sector index to grow at 15%, which is about 5% higher than the expectations set for the broad market. And when it comes to the power sector, it is at 12% growth, which is again about 2% higher than the broad market. And that is a considerably good amount of growth that we can expect. And if you look at the current valuations after these corrections have happened, the capital goods sector is trading at a discount to the 1 year average, whereas the power sector is still at having a slight premium of about 7% over the 1 year average. So that is the reason why when it comes to the outlook for the next year, we are positive on capital goods, but at the same time, when it comes to power, we exercise some caution. This sector by nature has some execution risk, and also the current valuations, when factored in along with that, will be something that the investors have to look at. So that is the reason why we maintain a neutral stance on this particular sector.
Okay, so it's a strong buy for capital goods that you would recommend?
Yeah, there are certain pockets which are very attractive to me. Like for example, you can look at it as a tandem with how the growth will go for the power sector. So the shoot from which all of this has to grow it will first reflect in capital goods.
Oh, very nice. And in power, are you looking at solar power specific or power as a whole?
Yeah. So that is the next growth. So we see India is transitioning from the conventional sources that we have to renewable sources, right? If you look at it, we need to reduce the kind of carbon footprint that we leave behind, and renewables is a way to achieve this. And we are seeing a lot of tenders that are coming into market, very interesting tenders, and newer tariffs are being recognized, which is proving to be very beneficial for the end users as well. So renewables is one of the places where I'll be looking at more clearly. But at the same time, the government also is stepping up its game in conventional power sources like nuclear. Like for example, in the budget we had some allocations for nuclear energy development, and also for the Bharat small reactors and all that. Along with the conventional renewables, that will be the story that is.
So it's like a buy for capital goods and a cautious approach for power.
Yeah.
Anil, defense stocks, has seen the good, bad, and ugly this year. From being the baby of the investors to a 50-60% slump in this particular sector. So what is your thought on this? What would you like to tell the investors about the defense sector?
The change started in 2014 when the government's policy has changed to domestic manufacturing, as well as there was a rapid modernization in defense. So these these steps taken by this government has led to improvement in order inflow as well as earnings visibility. And pre 2014 era, these stocks were trading in between say 10 to 12 P multiples. But post these steps taken by the government, the valuation has improved along with the earnings, and it started trading between 15 to 20 multiple. Also, apart from this, government identified certain products where we have sufficient technology as well as manufacturing capabilities, and on a regular basis they came with the particular list, and in that list those products will not be imported from other countries. This step started from April 2021 to and last list came in 2023 January. In January, the list was little exhaustive, and this included large platforms like tanks, warships, and all. So what happened is there was a significant improvement in the order visibility of these companies. Because of that, it triggered a rally in these stocks. Also, we have to understand that there is only few companies in this sector, and also certain large companies are government owned with 75% stake held by these companies, government, and because of lower liquidity and higher cash attracting this chasing these companies, the valuation has valuation triggered at a higher levels from 20 multiple to it started trading around 75, which is not sustainable, because we have to understand that the clients of these companies are government arms only, like Army, Navy, Air Force. So they have a budgetary constraints. Because of that, they can't able to execute, even though they are sitting with a large order book. They can't able to execute at a faster pace. Because of that, there was a sharp slump in the valuation, and now there is a reasonable. It has reached a reasonable levels of somewhere around 40x. Given the future earnings projection, which seems to be a fair levels to look at now.
It's a good time to invest for the investor.
Yeah, you can see the story is for next 10 years, because the policy is set now, and also the confidence of domestic manufacturer has been taken by the government. Now the actual execution should start now. So given this, this is a right, we can consider accumulating stocks at these current levels. But the investor should have a 1 to 2 year to 2 to 3 year long term view.
Okay, so it's a long-term view for the investors, wherein you look at a different sector being very bullish. So that is what investors should look at. Okay. And I have another question for you. What do you think that investors who are holding stocks in these two sectors, infrastructure and paint, should do for this coming year?
Okay, infrastructure segment, like the individual companies has already given a better than market return in the current calendar year. We expect the same trend to continue in the next calendar year as well. So I pointed out, like they have good order book. The visibility for the coming year is pretty much sure and clear for the companies and all. If you see the target for the MORTs, like Ministry of Road Transport and Highway, they have a target of construct about 13,000 kilometers in the current financial year. But till November, they have constructed only 5,000 kilometers. So the next phase will be very much good. Like they need to construct at least this much of kilometer in the next in the coming quarter as well. So that if you take that point into consideration, we can say that the companies will likely to perform well in the next year as well. But in case of paint, that is a very valid question you have asked, like what the investors will do in the next calendar year. As I pointed out, like the big players like Asian Paints, they likely to do better as compared to the other third and fourth player and all, because they have so much of market share. With them have the 45-48% of market share is still holding by Asian Paint in this paint sector and all. Maybe 1 or 2% of market share loss likely to happen because of the entrance of the large player like Birla Opus and all. But on the long term perspective, Asian Paint is a good bet. Their company's valuation is pretty much like below the 5-year averages and all. So on a long term perspective, you can hold that stock.
Okay. So it's a bullish trend for the infra and a hold strategy for the paint sector. Arun, I have a question for you. What should the investors who are already holding capital goods and power do for 2025? What should be the strategy? And for the new investors who want to invest, do you have any stock recommendations in these two sectors?
You can play the capital goods as something as a derivative of the other sector's growth story. So, what is happening is that when it comes to the renewables expansion, currently India's transformer capacity and also the transmission infrastructure that we have is deficient to match with the growth that renewable capacity addition will have. So, as a result, I believe that this is where the first growth will start in capital goods when you're playing it along with the power sector growth. So, I would believe that investors who are already invested in such kind of stocks, they can go for an accumulation strategy, or if they find any stock that they would look at holding for the long term, then they can definitely go for a strong buy when it comes to this particular sector.
So, Anil, you earlier said it's the right time for the investors to invest into the defense sector. Do you have any stocks to recommend for the investors?
By looking at some of the stocks which are in our coverage, that is Bharat Electronics and Astro Microwave, they are sitting with a good order book. Also, the margin profile is very good, and they are working on some niche profile where the complexity and the technological requirement is very high. These type of companies are now we are focusing on those type of companies. We have recently given a buy recommendation on these stocks post Q2 results.
Okay, so you are saying Bharat Heavy Electronics and
Bharat Electronics Limited
Bharat Electronics Limited
and Astro Microwave.
Astro Microwave. So these two stocks for the investors to look for. And one last question to Anto. What would be your recommendation? Like if you would want to recommend one stock in both the sectors, infrastructure and paints, to our investors who have not yet started investing in these two sectors, which stocks you would recommend?
For the stock perspective, like I like NCC Limited in the infra space, which is already also in the civil construction and all. And the other one is HG Infra, large player in one of the large player in road construction activities and all. Like L&T also you can consider the blue chip company, and KEC International, Triveni Turbine. These are the stocks which will remain positive.
Okay, and for paint, as you mentioned, Asian Paints would be the one which you want to hold.
That is hold on strategy and accumulate strategy we can follow.
Very nice. So that is for the investors to know what stocks to hold in the infra and paint sector. Okay, so let us look at capital goods. What would your stock recommendations be in capital goods sector?
So you have the likes of Hitachi Energy, which manufactures all these transformers and transmission related. And apart from that, they also have some exposure to data centers also, which is another important growth story that India has to develop. And the other one is CG Power and Industrial Solutions, to be clear. Apart from that, when it comes to the renewables play, we are very positive on Suzlon Energy, because wind as another form of renewable energy is very important for India to maintain its round-the-clock infrastructure when it comes to renewable energy generation. So Suzlon is another stock that we are positive on.
Okay, so in capital goods, you have Hitachi, that
CG Power
and Suzlon. So yeah, so these three stocks for the investors to look for.
And when it comes to power sector, we are positive on stocks like Tata Power and Torrent Power. When it comes to the PSUs like NTPC and Power Grid, we have a hold recommendation when it comes to those stocks.
Okay. Anil, one last question to you regarding aviation sector. What is your outlook on the aviation sector, and do you have any stocks to recommend for our investors?
This is much happening sector. If you recall, there is a increasing usage of travel through airlines. In recent times, if you see from 2012 to 17, the domestic passenger growth was somewhere around 11%, and but from 2017 onwards, that till pre-pandemic time, FY20, the growth was 15%. If that pandemic would not happen, the growth would have been higher. So also, if you look at the number of airports in 2017, it was 74 airports. Now it is 154, and government is spending on now in recent budgets and all. They have plan to increase the airport numbers by another addition of 200 airports. Also, the UDAN scheme, where the tier 3 cities has been linked. So this is a very good happening given the increasing people's preference to travel by air. Our top pick from this space is Indigo, Interglobe Aviation. When we started covering the stock, it had a market share of 14%. In 2017, we have now the market share is 65%. They have cornered almost 65% of market share, and they have highest number of aircraft operating. Also, they have a good balance sheet, healthy earnings projection. Also, recently the crude prices started coming down. There's a we believe that the earnings is likely to improve. We have recently given a buy rating on the stock.
Okay, so Indigo is a buy. So with Tata coming into the play, would it not affect Indigo?
The Tata and Indigo have cornered around 90% of the market share. It is an unlisted player. Also, we need to consider that a company holding 65% market share, it is not very easy to beat that company. So we continue to believe that they are making right steps. They have very good domestic connectivity. On that base, they are now expanding to the international. They have started international based on the strong connectivity from the domestic, which is going to help them in expanding to, say, other Asian countries, Gulf, Sri Lanka. So also these are the areas where they are now currently aggressively expanding. And they will get a sufficient, because of the strong domestic network, they will have a sufficient passenger also. And if you see 85% is the total passenger in an aircraft, they are having a capacity utilization of somewhere around 85%. This is something very good in terms of the industry standards.
Okay, so viewers, we have a very, very strong approach wherein infrastructure is concerned. Anto says he's very bullish. It's a buy. It's a hold where paint is concerned. Where capital goods and power is concerned, Arun is saying he's very bullish in capital goods and a cautious approach on power. And defense and aviation, Anil is saying he is very bullish in this 2025 for these two sectors. So a lot of things, a lot of sectors for you to look for. So this is what we have from our end for this particular episode of Spotlight. Thank you so much for watching. Don't forget to subscribe our channel. Thank you.